Okay, live stream should be good now. Sorry, I thought I had started it earlier. I'm sorry for being late today. It's been a wild morning, but we're here and we're making some money. So that's all that matters for us, is making some damn money and making our life that much better. Of course, I'm not logged into Robinhood yet. Not sure how I even got logged out. But good morning, Guile. Happy Friday. Good morning, Roddick, Irfan, Aaron. The real MVPs here every single day. Thank y'all for being here. Thank y'all for liking the video. Let me do my two-factor authentication. Good morning, Kevin. Welcome. Glad to see you here again today. 795, 990. That is the wrong code. I hate two-factor authentication sometimes, but at least we're keeping our account safe, right? 827530. Good morning, Junior. I think that's a new name, maybe. Welcome. Hi, little Nate. Good morning. Currently up $200 for this 395, 394 put debit spread that I had opened for SPY. I opened it at around 345. It closed yesterday. Currently, it's up by $200, and the bank puts that I opened are doing okay. The BLK put debit spread that I had opened is only down about $48 right now. BLK itself, let's get rid of these watch lists that I have because they are useless to me right now, and just expand this one. So I have BLK, I have a trade against Bank of America, and I have a trade against Wells Fargo. Wells Fargo is the one that's down the most right now, down 5%. Bank of America down 2%, and BlackRock is down to 735. So I'm kind of shocked that these haven't gained more value. I would have thought that these would have been probably going for at least $1 or more, but I think the bid ask on these BLK put debit spreads is just kind of stupid. If we look at the bid ask, it is currently 0 and 5. So people are either taking max loss on it or asking for max profit, which makes absolutely no sense. But yeah, it's a good morning so far, up $500. Unrealized profits. So let's actually realize some profits today, huh? This GLD Leaps call option, Jesus Christ, it just keeps on going up. Up $715. I'm assuming the dollar is down today, which helps out UUP. Actually, the dollar is up 0.25%. Gold itself is up another 0.5%. Usually it goes the opposite way. If the dollar goes up, gold usually comes down. So I'm kind of shocked that they're trading in tandem with each other. Good morning. That's a name I haven't seen before, so welcome to the live streams. Hopefully you tune in tomorrow too. SPY is currently trading at $394.09. I'm hoping... Ooh, I kind of wish I was able to get out when I was at 393, but looks like we might be turning around so far this morning. It looks like a solid pivot off of that 393.04 mark. I'd imagine the RSI is still in the negative, or not in the negative, but under 50, which would be bearish sentiment, which is why I said negative. Let me pull up this is the IBP, which is irrelevant for what I need right now. But the RSI, actually just at 50, so we might just trade neutral here. I wasn't able to do my morning analysis, so I guess I can kind of do it so you can all see it. Usually I have 20 minutes to do an analysis before, but today I just didn't have enough time. So let me do my little analysis. First thing I'm going to do is I go over to investing.com, check out their most popular news. So what's driving the sentiment today? What is moving the markets in one direction or another? Is it bullish or is it bearish? And the biggest news today is the dollar going down in value. Actually, it was slightly up, like I said. That weighs negatively on stocks. Typically, whenever the dollar goes down, stocks have an inverse correlation. The crypto woe, I'm not really sure what that's about. Bank results, so all the banks came in negative so far is what it's looking like, with Bank of America, BlackRock, and Wells Fargo all being down like 2 to 5% today. So bearish earnings for banks, as expected, because when they're not taking out as many loans because housing prices are too damn high and people can't afford mortgages, then they're not going to be making as much money. If you're not getting as much top line, even if your bottom line goes up because you're making more margins with the higher rates, if you're not taking on that much more revenue, you're not going to be that much more profitable. So we'll do a little bit quick analysis for the bank earnings, but the biggest news that I saw today that I tweeted about this morning is the Tesla price cuts. So the way that I see this is that Tesla is actually caving into the political pressure of lowering their prices. And I'm honestly kind of surprised that Elon Musk didn't come out with anything about this upcoming price cut. You would have thought, as the thing is, like, people basically overpaid for their vehicle if they bought it. Literally last week it was going for $65,000, and if we go over to my Twitter page, I posted that now they're going for $52,900. So a person that bought their vehicle a week ago bought it at $65,000, and now they can go back and they can cancel their order and get it at $53,000. Now, I guess they can cancel their order. They will pay like a fine of, or not a fine, but a fee of like $500. So, but the way that I see this is that they're caving into the political pressure that the IRS put on them to lower their prices. So the tax credit was only available if they dropped their price below $55,000. So they dropped it to $53,000. Gonna kill the resale? Yeah, absolutely. The used Tesla market is gonna freaking plummet like hell because of this. And now, you know, the new prices are coming down too. So that it's a very bad situation for people that were buying Teslas over the last couple of years hoping to make a profit. And there were so many people that were doing that. Actually, there was people that ran businesses just buying Teslas and then reselling them after they got them at a higher price, and now they can't do that anymore because free money is no longer available. Thank you, Fed Chair Powell, for getting rid of the nonsense money in the economy. It's a good thing. It's shitty for the people that did it, not being able to do it anymore, but it's a good thing for the economy, because making money out of nothing, literally buying a car, speculating on the price going up, and then selling it later is not a good thing for the economy. To me, this is very expected news. Had to come out at some point. Yeah, I was expecting it too. I didn't think that they would drop it below the 55,000 mark. I was very shocked that I see it as Elon and Tesla caving into the political pressure. But, you know, I am very jaded against politics and government. So maybe that's just my worldview, my jaded worldview. Buenas. Have to come out at some point, yeah. All right, so this put debit spread currently up by 175 views. Dollars. Jesus Christ, I can't freaking talk today. I kind of want to get out of it. Right now, we're trading at 50 on the RSI. There's not really any kind of crazy news that would send us down. The biggest news, again, is the bank earnings coming in bad, so that's a negative. And then Tesla lowering their prices, so that's bad for both tech and both banks. So that's a double negative. We are down 0.7%. So we need to figure out if if this new news on the bank earnings and Tesla lowering prices warrants that much more of a sell-off than 0.6% right now. It's actually making a little bit of a rally. I would say anywhere between 0.5% and like 0.8% would be reasonable. Right now we're trading down 0.6%, so if we go back up, I don't know, another 0.5%, that would probably be 0.005 times 400 basically. That'd be $2 up. So 0.5% is $2, so that would land us at like $3.96, which that's definitely going to make these a lot cheaper. I bought 8 of them. I'd like to take some profits off the table. Currently I'm up 300 today, and some of the bank earnings trades are going well. The BlackRock is definitely doing well. Wells Fargo is losing its value. They were going for $1 each. Now they're going for 61 cents. You're going to get some IV crush if you're just going straight long put option or long call option. So that's why I generally try to stay away from buying just regular puts like I did for Wells Fargo. But I did only spend, $200 or something on it. So I didn't go as heavy as, let's see, I guess I didn't really go heavy on BlackRock either. Interesting enough, but yeah, it kind of looks like we're bouncing up. The RSI is above 50 for SPY. The dollar is headed up, so fundamentals tell me that it's going to come down. Let's check the 10-year treasury rate. That's another fundamental to check. Currently down 0.12% at the lows of yesterday, so that is a bullish thing for the growth market. But then you have the bearish weight of Tesla as well, with them lowering the prices. So Q's, I would imagine, is probably going to be pretty flat based on that. So QQQ, you might be able to pull off an iron condor. Not sure if we can say the same thing for SPY though. I think SPY is going to hold down today, so I would probably be neutral to bearish rather than just straight bearish, assuming that it's going to keep falling. So the way that I would trade it, it would be a call credit spread. I don't know if I'm going to take on any new trades today. Usually on Fridays, I don't like to take on new trades because I usually end up losing money on Friday most of the time because of how volatile the markets are. So I think I'm just going to stick with what I've got now, try to close out of what I can at a profit, and we'll probably call it a day after that. So let me pull up the Robinhood account. The put debit spreads are currently up 50%. Originally bought them at 30, now they're trading at 45, I guess. It's hard to say that it'll go back below 394. Like I said, I'm bullish, or I'm bearish to neutral today. So there is a chance that it goes down, and I'll probably put that chance between 50 and 60%. So right now it's telling me that there's about a 43% chance based on these spreads going for 43 cents a piece. I say there's a 50 to 60% chance. So I want to sell it for at least 50 cents each and up to 60 cents if I can. Trading the iron condor for SPY, very stressful. Yeah, iron condors can be very stressful because you're worried about both sides of the stock going up and going down, and that's why you get so much more credit, is because you're taking on that much more risk. Frisky Dingo says SPX put credit spread at 3,900, 39.20 and 39.15. Don't fight the trend. I mean, the trend is down today so far this morning in the pre-market, but on the 5-minute chart, definitely looking bullish with about 50 RSI. TLT currently going up, so the bond markets are going up, which usually results in the stock market going up too. Or that could also be recession fears, people buying into bonds. So it can be perceived two ways, really. It can be perceived as bullish since rates are going down, and that means that bond prices go up. Or it can be seen as bearish in that we're going to get a recession this year, and people are buying bonds as protection. Wells Fargo still headed down, currently trading at 41. What is the strike price that we chose for that? Wells Fargo put. We chose a 41 strike price, so I'm surprised that these aren't worth much more. Because the bearish price action could continue to send this down. I do actually want to look into their earnings, see what earnings look like. So the Wall Street estimate was 67. They actually came in at 63, so that is a miss on the earnings per share. Not really much of a surprise. And if we head on over to Bank of America Investor Relations page, took out a mortgage to buy stock options. Oh, jeez. That sounds dangerous, but okay. I would not take out any leverage to trade options, but to each their own. Building my JP Morgan shares. I don't think that buying banks is going to be an ideal buy over the next probably 1 year or so, 2 years maybe. The price of homes just hasn't come down to reflect the higher interest rates, which means that they're going to get less and less mortgages taken out and make less money overall. Let's see. Financial results. I would rather look at the 10Q, but we can look at the release, I guess. Record net income of $3.6 billion. Client balance is relatively flat at $1.6 trillion. Net income $1.2 billion. I wish they actually had a real income sheet to look at. I hate when they do these press releases and don't actually file a 10Q. It's so much harder to read whenever it's written like this. It's my biggest pet peeve of earnings. Balance sheet. Okay, this is useful. I usually like to look at their cash flow statement rather than the balance sheet. I feel like that's more important to see where their cash and their money is going, rather. All right, so this is the income statement. The earnings per share was $3.21 is what it's telling me. That is not what this is listed at. Am I looking at the right? Oh, I'm looking at Bank of America versus Wells Fargo. So their earnings per share was expected at 85 cents and the actual was 76. So that was a decent miss too. Still making a rally though, interesting enough. Bank of America is the only positive bank stock today, so far at least. Wells Fargo is down 3.5. BlackRock is down 2. 10-year Treasury rate is down half. Q's currently down 0.5%. SPY made its way back up to 3.95. That I find a little bit concerning. I want to see though
their cash flow statement. I'm sure they still have a crap ton of cash just because banks have so much cash. It's ridiculous. But let me go find the 10Q. They probably haven't reported it. Usually they don't have to do it until like one business day later, which is really annoying, but that's just the way that reporting goes. Not really much we can change about it. Let's look at Wells Fargo investor relations. Quarterly earnings. Press release, presentation, quarterly supplement, PDF. What's the quarterly supplement? Is that the 10Q? That actually does look like the 10Q filing. Yep. Let me make sure. This is what a 10Q would usually look like, at least. So they have the statement of income, the balance sheet. Let's see if I can find cash flow. Nope, they don't have a cash flow statement here. So this isn't a 10Q, otherwise it wouldn't include the... So annoying. Alright, well, I guess we're just not going to be able to read 10Q today. We're just going to have to go by what Thinkorswim is telling us and what we saw in the earnings. So Thinkorswim is telling us that it came in well below expectations for Bank of America, Wells Fargo. Haven't checked BlackRock yet. BlackRock was expected at $8.93 earnings per share. Actual was $8 and it was $8 flat. So that was a very rough miss. The problem with BlackRock is a lot of their money is tied up in equity, and whenever equity values fall, the earnings is going to fall with that. So that is the main issue and why BlackRock had such a worse earnings report than something like Wells Fargo or Bank of America, which are more traditional banks that people just use to store their money and save cash rather than BlackRock, who goes out and buys pretty much every single stock that you can think of. I don't know if you've ever read a 13F filing from BlackRock, but they're long. They have so many different stocks. They invest everywhere. And I mean everywhere. And whenever equity values fall, obviously their earnings is going to fall with it. Do I mess around with TQs and SQs? No. Not much of a fan of leverage ETFs personally. The only one that I really trade is UVIXI, which is based on the VIX. But that's a little different story than, Qs and SQs. It is only 1.5 leverage versus SQs and TQs being leveraged 3 times. And the more leverage that you get, the more time decay that you're going to get. So you have to keep that in mind whenever it comes to trading leverage ETFs and products like UVIXI. But we ended up topping at 395.78. Got rejected for SPY. Looks like we're going to try it one more time. The RSI is at 60, so might just be time to bail out on the put debit spreads. We bought them for 30 each. We might be able to get out of them for 40, 45 if I had to guess. If we do come back down to 394 and give up this bullish momentum that we're experiencing right now, they would be going for around 40 cents each at that point. Whenever they're going at actually, no, they should be going at 60 cents each if they're trading at 394. And if they're trading at 395, they should be trading at 40 cents. So I think they're mispricing them. They're a little bit cheaper than they should be. But momentum definitely seems up today. I'm very shocked that momentum is up with banks and tech stocks both down this morning, but things can always change around, I guess. Wells Fargo is making its way down further, down 4% now. BlackRock is down 2%. Bank of America down 3.5%. Let's see. 10-year Treasury rate is flat. So 10-year Treasury rate is actually recovering a little bit. That is a bearish sign. If the 10-year Treasury rate goes up, that usually weighs negatively on tech. So I'd be a little bit concerned about the 10-year Treasury rate making its way back up and Q's coming down because of that. What about JP Morgan? I haven't checked them just yet, but let me see. JP Morgan is down 1.3%. So this is more of a traditional bank, right? They do have an investment bank, but it's a lot smaller in scale than something like BlackRock. So they're not going to be as weighed down heavily on stock values falling as something like BlackRock. Their earnings per share came in at $3.11 versus $3.37 expected. Or sorry, $3.57. So that's almost a 20% miss that they experienced. And then BlackRock experienced seems about a 10% miss, 8 versus 8.93. So JP Morgan actually had the worst of the misses, it seems like, and they're only down 1%. That's actually a little bit shocking. And that almost seems to warrant a decent put option. Goldman Sachs consumer banking losses for the first time. Goldman Sachs? Really? So that's GS. They're still doing okay. They're only down 0.5%. I am very shocked that they're close to their 1-year highs, the 52-week highs. Like, it makes no sense for banks to be doing well right now. I know that the interest rates are up, but the overall amount of money that's being lent out and gained interest on is going down. So, no bueno. All right. I think I'm just going to get out of the... All right, these are going for 40 now. I can agree with 40. I can't agree with 36 or whatever it was. 38 cents. So let me try to get out of these at 40. They're making so much in credit card interest. Yeah, that's true. But credit cards, the interest rates are higher, but there's not as much money to be made. Like, say, everybody needs a car, right? For the most part. Everybody needs to buy a car, that way they can get to work. And vehicles will cost you, what, a good $30,000 on average right now for a new vehicle? That they're making, what, 4 or 5% on? 30,000 times 5%, which means that they're making $1,500 a year per person on interest payments for a vehicle. Now, let's say that the average credit card debt is like a tenth of that. Let's say that it's something like, I don't know, $3,000. I can't imagine people can rack up like $30,000 of credit card debt. I wouldn't say that they can't, but they're only getting charged $30. Actually, no, sorry. It would be a 15% roughly. We'll actually call it on the higher end 25%. They're only getting $750 of interest there versus $1,500. So they're getting double the interest payments on a $30,000 vehicle than they are for the credit card payments. per person too. So that adds up with the more people, right? And if you're talking about a home, now you're talking about $300,000 and you're talking about an interest rate of 7%. So that's $20,000 that they're collecting in interest each year from these new homes that are being bought, but now those new homes aren't being bought anymore. Right? So they're making less profits. I'll stand for the credit spreads king. I do love my spread options and credit spreads. I'm actually kind of tempted to open a call credit spread, assuming that will be under 397-ish. That might not be a bad trade today. I would be bucking the trend. Trend is definitely up today, and the trend is sometimes your friend. Sometimes it can be your enemy. I think I'm going to make it my enemy today. Probably not going to go heavy with it, just because of low certainty, and going against a trend is usually not the best idea, especially on Fridays when it's almost always algo driven. But looking at a 397, actually they have 397, 397.50 strike prices, so I could even risk even less money. But right now, that's not the right strike prices. What the heck, man? If I assume that it's going to be under 397 with a call credit spread, I'm getting paid 22 cents in credit. That's an okay credit. I would have probably wanted like 30 cents, 25 cents at least. But I think I'd be okay with taking 22, 23 cents. So right now it's going for 23. We'll see if I'm lucky enough to get that order. And I'd probably say I'm okay with losing like 400-ish. So that means I can open roughly 5 of these at 23 a pop. Oh, the bid just moved up on me at 24. God dang it, this bid-ask spread just moves too much. My fingers aren't quick enough. Can we look at QQQ? Yeah. Give me 1 second. I'll open this trade and I'll move over to the Qs. All right, so new options alerts. Whoopsies, can't type. This is going to be a day trade. Just opened a new SPY call credit spread that expires today. 1/13 expiration is today's date. And I got them for 25 credit each. No, 24. All right. So to me, so far, it seems like we stalled out at that 395.78 mark. We got a little bit of a double top right around that price level. We could be, breaking past it soon enough if the trend continues. It does look like RSI is, healthily above 50. It's 70 right now, so that is bullish. So if you want to trade with the trend, I wouldn't take this trade on. But I think we're going to be bearish to neutral today. So I think that getting above that 395.78 level is going to be a little bit of a struggle. And then going up to like 397, 398 is going to be even harder. So call credit spread for SPY, assuming we're going to stable at 397. And Jack wants me to look at the Qs. Currently only down 0.3% today. Definitely making a recovery off of the pre-market sell-off. Maybe we head back to like 279. Seems pretty likely at this point. RSI is getting overextended, but that doesn't mean that it can't continue as long as it's above 50. That's just bullish. So just because you see RSI above 70 doesn't mean that you should just short immediately. RSI should be used more as a gauge of bullish or bearish. Above 50 is bullish, below 50 is bearish, rather than saying, at 70 RSI, then short. It's not an exact formula. You have to take into consideration all the different variables. And there's going to be variables that you miss too. So what is a call credit spread? It's just assuming that the stock will trade below the strike price that you choose. It's kind of like a cover call, but you just don't need 100 shares in order to sell it. You just need the difference between the strike prices. JP Morgan and Citi put spread. Any info for that? I do have trades against banks, not JP Morgan and Citi specifically, but I do think that it could be applicable to many of them. BlackRock, I have a 732, 730 put debit spread, assuming that it's going to be under 730 by next week, 120. Right now, this one's up by 36% already. I only bought 2 of them for like $1 or $160, so I didn't go heavy on it. Wells Fargo, I bought a 41 put, just a regular put option. This one currently trading at 52 cents each. It expires for next week, so I'm very surprised that it's not worth more. How come SPY shows up, like the price of SPY shows up here whenever you have a SPY option, but Wells Fargo doesn't? That's really annoying. Wells Fargo's at 41.25 though, so it's basically at the strike price that I chose. I would imagine that it would have more extrinsic value because it's at the money or currently at the stock price or the strike price that I chose, but it's just not getting any value, which is very, very odd. But you do have Ivy Crush, so implied volatility is falling after the earnings report, which is making the contracts less valuable, so you have that weighing down on you, which is why I prefer spread options to regular puts. Unless you expect just a huge move for the stock that the markets don't expect. But yeah, SPY is making its way back up, 396 now. Just above that 395.78 mark, so it does look a little bit starting to get bullish. RSI is going up over 70. But again, we can't just say that that's the time to short. Let's see if we have the Michigan Economic Report. I guess I missed that. That was one of the things that I wanted to close based off of. So let's go to the Mich Economic Report. See what we got going on. We got 5-year inflation expectations going back up to 3%. Interesting enough. So that means that inflation is becoming entrenched into the economy to where people think that prices of goods are just going to keep going up at 3% a year for the next 5 years, which is not what the Fed wants. The Fed wants it to be 2%. The consumer is saying that it's going to be 3%. So what the Fed wants in order to curb inflation is for the consumer to have the same consensus that the Fed has at 2%. And they came in at 3%, which is higher than it was last month at 2.9%, which was a drop from 3%. So it went from 3 to 2.9 to 3. And then consumer expectations. So what the consumer is expecting for the economy over the next year came in at 62 versus 59 expected. So the average consumer expects the economy to be doing well over the next year. I'm not sure how the hell they think that when Wall Street, pretty much all of Wall Street thinks that there's going to be a recession, but that is a positive sign. That means that consumers don't fear a recession. You have the consumer sentiment coming in at 64.6. So this is a survey of both the current economic standing of the U.S. and then the forward-looking, like 1 year. This came in at 64.6 versus 60.5 expected. So the average consumer thinks that the economy is doing well and they expect it to continue to do well over the next year. And the current conditions, so what the consumer thinks about the current economy, came in at 68.6 versus 60.0. All of these numbers are super high versus the consensus and super high from the previous month. That's very shocking to me. To me, I feel like things are starting to get worse. Like we're starting to see things fall apart. Like we talked about with Tesla dropping their prices. Things are starting to kind of unwind, basically. Is it smart to ever borrow money to trade with leverage or debt? It is whenever interest rates are low and whenever there's a crap ton of free money in the economy thanks to the low interest rates. But whenever interest rates are going up, I would generally avoid leverage. Taking on leverage whenever interest rates are higher means that you're going to get less borrowing power. You're going to spend more in order to pay off the debt because of the higher interest rates. And you also risk the stock coming down or whatever you're trading coming down in value to where you'll get a margin call. And you don't want to be in that situation. You don't want to have to liquidate your account because, one of your positions went bad. My friend says consumer sentiment is bullish because the gas prices being lower in California. Natural gas in California is actually going up the freaking wazoo, according to Maverick of Wall Street. I haven't looked into the prices of natural gas in California specifically, but apparently natural gas prices are soaring through the roof, specifically in California. And that means that heating and cooling and all that, it's going to get that much more expensive over in California, where it's already stupid expensive to live. Gas prices have dropped a fair bit. Yeah, that's definitely a positive sign for the economy. I think that gas prices have stagnated over the last couple of weeks, or like 2 to 4 weeks. So they really haven't moved much, but they definitely did come off their highs. They were trading, or gas prices were like $5 at one point at the worst. Now they're down to $3.50 where I'm living. And that's good, but that's just transferring over into other parts of the economy. The wealth is just going from one part of the economy to the next part of the economy to the next part of the economy, right? So you had gas prices being super high, energy prices being super high. Now what you're seeing is the clothes on our backs getting super expensive. The latest inflation report showed a pretty sizable jump in the cost of clothing. I don't know what other sectors went up a lot, but basically it's just transferring, the inflation is just transferring from one sector of the economy to the next sector of the economy and just continuously eating away at our buying power just in different things that we spend our money on. I mean, inflation still came in at, 6.5%. So yeah, gas prices are down, but we're spending more money to buy clothes. But that also goes against what I said on Twitter yesterday, talking about how you can say X is bad or Y is bad, but the headline number came in lower, and that's all that people pay attention to is the headlines, because that's all people have the time to pay attention to is headlines. They're not going to read through the whole report, because who has the fucking time to read through the entire CPI report besides people who do it for a living, Wall Street people, myself. But the average person that's buying and selling stocks isn't going to read the whole CPI report. They're just going to see what's on the headline and then make a buy or sell decision accordingly. Yeah, consumer sentiment definitely seemed like a good thing. That was at 10 a.m. Let's see the reaction since 10. So starting at 10 a.m., we definitely got a bullish candle there. I guess that's why we triggered up all the way to 395.78. So that could knock out our bearish assumption. We could still trade flat based on the banks being down as bad as they are today. So call credit spread might still be intact. The put debit spread might not be so much, might not have so much value to it. Let's head on over to Robinhood. Yeah, account's slipping below 31. It was at 31 and some change, 31.5 at the peak. But let's check the put debit spreads. They're going for 30 right now. That seems reasonable priced. I still think we get rejected around this mark. The consumer sentiment could carry us, but I don't know if the markets really care that much about consumer sentiment, too. Like, yeah, it's new data that's coming out that's showing that consumers are feeling good about the economy, but we all know how the economy is actually going. So I don't know. It's kind of up in the air, I feel like, with that one. Can you explain why banks are going down when they did better than the estimates and the earnings, or did I read it wrong? I think all of them did worse than the expectations. Let me read through it though. Wells Fargo, the expected was 67-cent earnings per share. Oh wait, no, 67-cent actual earnings per share versus 62 expected. So that was a beat. Oh god dang it! It done switched that around on me. Got rid of my VIX. Bank of America came in at 85 cents versus 76 cents expected. So yeah, I guess they did end up beating on the earnings per share. This one was, I was reading it the opposite way around. 8.93 actual versus 8 on the estimate. But I don't really know. That's interesting that they all fell. I guess because they were already trading so high, so people expected even more out of their earnings than they actually got. So you have like the Wall Street estimate, right? But then people expect, oh, they're going to beat by 20% or they're going to beat by 10% or whatever. And if they don't beat by that X percent that people are expecting, then they're going to sell off the stock. And you also have to look at previous earnings too. So you can't just look at the latest earnings and be like, oh yeah, well this is like you have to look at previous earnings. So the last earnings per share was 9.25 versus 8.93. So that's a drop in earnings per share from the previous quarter. And if you go back a year ago, 1, 2, 3, 4 quarters, they were doing 10.40 in earnings per share. So their earnings per share over the last year, 1 year, has fallen by about 14-ish percent, 15% almost. So is that really a good sign that they're earning less money this year than they were last year? And that trend is likely to continue as people are buying less homes during a recession? Probably not the best thing. So that's why their stock ended up dropping down 2%, currently making its way back up. Only down 1% now, so we'll see how it shakes out. We ended up breaking the 395.78 mark pretty significantly. I think I'm still going to hold the call credit spreads. But I think the put debit spreads we might just need to bail on. So I opened 8 of these. Right now they're going at 25 cents a pop. I think I might be able to get them out at 30-ish. That bid just keeps on dropping for me. But yeah, I think making our way back down to 394 might be a little bit of a stretch unless we just get a complete reversal somehow. But based on no news coming out later today, I don't think that we're going to get much of a reversal at all. Best thing is that we just trade flat. puts just got destroyed for SPY. Hold on 1 second. All right. Well, I gotta go pick up my wife and drive her to class. But yeah, let me head on out of these put debit spreads right quick, and that will be the end of today's live. I'm still gonna hold the call credit spreads, but these I feel like I just need to get out of. Why am I doing $1 spreads? Wouldn't it be better to do 5 less contracts and it gives the same level of protection? You get less credit for the wider the spread, less credit per collateral. So closing options alerts, premium 101, premium. Just cut losses on the 395, 394, put debit spread expiring today, 113 at 0.1, 0.22 each. And it's for SPY. All right, so still holding the call credit spreads for the rest of the day. See what's going to go on there. And I will catch y'all on Monday. And if you're in the premium Discord, I will catch... might catch y'all on Sunday for the Q&A if y'all decide to attend. So, see you later, everybody. I will catch y'all Monday, hopefully.